Welcome to the CPA Advisory Show. I am Jeremy Wells, CPA, and with me is my co-host, Chris Herbishon, CPA. Chris, how you doing?
Doing great. How are you, Jeremy?
I am doing well. So, this episode, I have been in a couple conversations across social media with other accounting firm owners lately, and this issue, I don't know if this is, post September 15 deadline kind of. We're trying to fall back and analyze how things have gone, maybe some post-game analysis, stuff like this. But there seems to be an uptick in conversation around concerns of efficiency, productivity, profitability, some of the things that, as a firm owner, you want to make sure that you're running a tight ship, right? You want to make sure that the people you've got working for you are doing a good job of getting work done on time, and you want to make sure that your firm is actually making money, right, on the work that it's doing. Yeah, right. And so I can't blame these firm owners for being concerned about things like efficiency and profitability. But it got me thinking, like, what does that actually mean? And what are we actually talking about when we talk about productivity and profitability and these kinds of things within an accounting firm? So I guess let's just start there. Like, what does it mean for an accounting firm to be efficient or to be profitable? And is that something we should be concerned about? What do you think?
I think profitability you need to be concerned about because it is a business. It's not a hobby. We need to make money. We need to make a profit in order to pay our people. We need to make a profit in order to stay in business and then continue to help our clients. So profitability definitely matters. Now, what that should be, we can get into some benchmarking data and what that might look like. But the way that I would posit that, and the way that we think about it, or I think about it, is, am I making enough money on the bottom line in order to sustain the lifestyle that I need in order to make the risk that I am taking in running my firm worthwhile? That's the way that I think about it. Right, wrong, or indifferent. Now, when we get into efficiency and that sort of thing, that's where, in productivity, it gets a little bit trickier. And the way that I like to think about that, frankly, is the way that Ed Kless frames it. And he did a very beautiful job last week on our last episode of talking about it, which is, who cares if you're doing the wrong thing efficiently? Who cares? You're just making things worse. What we really need to be thinking about is effectiveness. And that's what we measure internally. That's what we base everything that we do off of, is, a combination of NPS score and turnaround times, meeting client expectations. And that's what I preach every day almost is, are we meeting client expectations? Are we meeting client expectations? Are we being effective? And if we are effective, the profitability thing should take care of itself, so long as we manage the business at least reasonably well, and future growth should take care of itself as well. And that's what drives client referrals, and that's what drives client retention and things like that. So with all of that said, I'm wondering how you think about it, Jeremy.
Yeah, I am very similar in terms of mindset, right? So to me, because I'm a solo operator, right? My firm is just me. I haven't ever tracked time within my own firm. I, haven't really felt the need to be concerned with efficiency because, for me, I just know, right, whether I'm being efficient or not. And I can lie to myself. I can rationalize things, right? I can say, like, yeah, I think that project was worth it, or yeah, I think taking on that client has been worth it, right? But I know deep down, I know the truth, right? I know the fact of the matter of whether, I should have taken that project on, whether I should have taken that client on, and those kinds of things. And then to your point about profitability, absolutely. Right now in the accounting profession, it is a seller's market in terms of finding work. And so, whether that's in terms of, running your own firm or in terms of if you just want to go work for another firm. And this is something that, again, as a solo operator, it's pretty easy. I don't have anybody outside of my household relying on whether my firm still operates tomorrow or not. My clients, they could find other firms. I could refer them out. I could sell the book to, another firm or something like that. And, they wouldn't shed any tears, as long as the work was still getting done. And so I like the way you phrase that in terms of there's a financial aspect to profitability of an accounting firm, right? Especially a small accounting firm. There's a financial aspect to that. What's the bottom line, right? And is that enough to sustain my personal life? right? But I really like that non-financial aspect that you added to it of, does it justify the risk of being a firm owner as opposed to just going to work for another firm, right? And I think a lot of solo firm owners would agree that this is sort of a constant thing that's in the back of your head, like, man, I could just give all this up, the stress, the toil, the day to day, the having to deal one on one with the clients, the endless questions. You go work for another firm, you're still going to have to answer questions, you're still going to have to communicate with clients every now and then, but at the end of the day, you're not the one responsible for that engagement. The partner is, right, or the
Yeah.
firm owner is, and you
Reputational
take that
risk too.
responsibility off. Yeah, right, absolutely. And so life becomes, on one hand, you are putting all your financial and career eggs in one basket with that firm, but on the other hand, you take a lot of the stress of business ownership off your plate, and for a lot of people, there's an appeal to that. And as somebody who had always been an employee before I started my own firm, a few years ago, I really didn't know the difference. And so there's always a little voice in the back of my head saying, "Man, why are you doing this to yourself?" Right? And so you're absolutely right. There is this notion of, I do need to make sure that my firm is profitable, that it's worth it, right? Both in a financial and a non-financial sense. But then, as far as am I being as efficient as possible? Am I being as productive as possible? Well, I'm, like I say, I'm a solo operator. I've got a family. I work from home. So if there is a day or a couple days, and whether it's tax season or not, busy season or not, if there's a day where I just don't feel like doing another tax return, I don't feel like doing another monthly close, and it's a pretty day outside, and my daughter's wanting to go to the beach, man, we're at the beach. And so effectiveness versus efficiency versus effectiveness, right? Both in terms of the way the firm is getting run. Now, of course, all that assumes that the client work getting done, and getting done on time. But there's also a personal aspect to that effectiveness there, also, and a lot of that gets missed when I see other accountants talking about these kinds of internal measures, right? Productivity and efficiency, these kinds of things.
Yeah. Are you running the firm that you want to be running and getting the work life balance, a piece of it? Are you getting what you need? Like, actually, my wife and I were talking about this last night. The three reasons why I left industry, and that's one of those 9 to 5s where you go in at 9, you're done at 5, and you're not taking client baggage home with you, and you're just kind of on the hamster wheel getting things done every single month, and it's very predictable, and you can make a good living doing that. But the 3 reasons why I left that world and took on the risk of running a business and the stress and stuff that comes with that. The 3 reasons: one, I wanted to spend more time with my family and have a little bit more flexibility and control over my schedule. So that's one. Two, I wanted to make more money than what I was making. And 3, I wanted to play more golf. So those are the 3 boxes that I tick for myself to figure out whether or not it's worth it for me to run a firm or go back into the industry or go work for somebody else or sell the book or blah, 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 right? But those are the 3 factors. And if those boxes are being met adequately, then what are we talking about?
Yeah,
And if
absolutely.
my employees are happy, and if their needs are being met, and if the clients are happy and their needs are being met, and we're helping them run a business, and we're helping them grow their business, and we're helping them feed their employees and their employees' families and things like that, by providing good advisory service, then we're good. And we don't need to worry about the rest of it. At least that's the way that we think about it, or I think about it.
So, I briefly worked for a firm. I worked for a firm for tax season, so about 6 months. And so I think you've had a little bit more experience working in other firms than I have. From the employee's perspective, efficiency, productivity, utilization, how did that, how often was that brought up with you from that, employee's perspective? And then, how much did that govern the way you thought about your workload and, your career and all these kinds of things? Like, did that factor in much?
That's a good question. And the firms that I worked for were different than the firm that I'm currently in. So the first firm that I worked for was a forensic accounting firm. I was there for 3.5 years. And I know that they tracked utilization, but I don't recall ever having a conversation about it. And that was one of those deals where you're tracking time to the tenth of an hour. And I don't ever recall having any sort of a conversation where, oh, we've got to write off your hours because of whatever and that sort of thing. So efficiency never really came into it, but that's probably more of a forensic accounting thing than it is a tax return thing or a
Yeah.
CAS thing, because forensic accounting is, I mean, it's
Well,
every
different.
engagement is different. It's just a different animal, especially what we were doing. So there's that piece. And then I worked for what I guess we would call a CAS firm as a contractor. And I think I did that for 4 years as well. And that was another situation. We were tracking it to the minute from our time perspective, but the time tracking tool was built into the workflow tool, so it wasn't really like a whole bunch of having to do mental math or having to really adjust timesheets or try to go back and figure out like, oh, what did I do 6 hours ago, that sort of thing. It wasn't like that. It was basically a start and a stop, and then you close the task off and you're done. Which, if you're going to do time tracking, I suppose that's the way to go. And that's the way that we tried it in my firm when we first started, but that has gone by the wayside. But never had a conversation there about efficiency or effectiveness or anything like that. It was more about let's get things done by the due date. Let's make sure that the books are closed by whatever date they had to be closed by, and let's make sure that the work is accurate. And then that was it. But that was very and there wasn't much client facing work there either. So yeah.
Yeah, so the brief experience I had with that firm that I worked for, it was kind of similar. The firm owner switched to a more advanced tax software that right before tax season. I started working there in October, and when we came back after Christmas, he had installed all the new tax software that came along with new practice management software that was all bundled together. And so the way
Sweet.
it worked is in the practice manager. Yeah, all this in January, right?
Yeah.
January
Merry
of
Christmas.
19. Yeah, January of 2019. So my first tax season working for another firm, my second tax season overall, and Tax Cuts and Jobs Act was first year that we were going to have to implement all of that, and then also learning all new tax software and practice management software. And the practice manager, the way it was set up, when you saw that you had the return on your list to work on, there was a button there that you clicked and automatically opened that return in the tax software, and it also started the clock. The time clock. And then over in the tax software, when you closed out that return, it would stop the clock back in the practice management software. So as far as the timekeeping went for doing the tax return, it was fairly automated. Now, anything other than that, like doing the bookkeeping, getting the books cleaned up and ready for the business return or anything like that, you had to go back in and manually track time. And then every now and then there was a glitch, right? Where if you didn't close out the return exactly the way you were supposed to, then that timer would keep rolling. And so I remember one morning sitting down at my desk and getting a phone call from the boss upstairs. And he just wanted to know why it took me 18 hours to do a relatively simple 1040 tax return. Right? And I was like, obviously that's not right, and I think this, right? I think you're just calling really to chew me out for forgetting to turn the timer off, when this is the first time I've ever had to worry about keeping a timesheet for accounting work or tax return work. But the one conversation we had was when he called me up to his office to roll out to me the compensation plan that he had come up with that was centered around this productivity bonus structure. And so it was, a minimum number of billable hours for the whole year, even though he did not bill clients for time. He used fixed fee and a little bit of value pricing. But if we met that minimum number of actual billable time, client work for the year, then for every certain amount of hours beyond that, we'd get a little bonus for the year. And I just remember thinking about that and being like, I don't care. Like, I just don't care. I just want to come to work. I want to do a good job. I want to get paid, and if I get to the end of the year and I'm 50 hours short of, this bonus, I'm not going to worry about it. Right. Like, I'm not going to sit there and think, man, if only I'd put in 50 more hours this year. Like, am I leaving money on the table? Maybe. But what was I doing for that 50 hours, right, that I could have been at work? Well, I was probably spending that time with my family. I was probably spending that time resting or sleeping or watching movies or just doing anything that I wanted to do instead of be working on tax returns. So that was my one sort of experience with having to think about productivity or utilization or anything like that from an employee's perspective.
So what do you think? Should we talk about some numbers now?
Yeah, let's do that. So now that we've kind of bashed this concept, right?
Yeah.
Of profitability and productivity and utilization, whatever you want to call it, efficiency within your own firm. Obviously we're accountants, and so we keep lots of data and track lots of data and like looking at numbers. So yeah, what do we know about the profession in terms of these metrics, in terms of the benchmarks?
Okay. So I pulled some benchmark data, and I've got three different sources, and look, and I say this even to clients, but to any of the listeners, like this is just benchmark data. This isn't written in stone. The data sources are what they are. Take this for what it's worth and what it's worth to you.
We're not judging your firm, right?
No, we're
If you're
not.
listening to
No,
this right now, we're not
no,
putting this out there saying this is what you should be aiming for, or if you're not hitting this, then you're not running a good firm. We're not
no.
saying any of that.
We're not judging your firm. We're not judging my firm. We're not, thank God, we're not judging Jeremy's firm. Like, we're not judging anybody, right? This is just the data that we have access to. So everything within context, okay? So we use Profit Sense for our client benchmarking. So what I did, and I had this existing report, and I pulled offices of certified public accountants, revenue under $1 million, entire US, and what we see on the net margin for the last 12 months is about 34%. And 2021 was about 33 and a half, so call it 34%. Last 5 years has been around 21, and then all years is around 20. So that's your net margin. We don't need to get into gross margin because we know that, that could be highly variable between firms. So somewhere between 34 and 20, put it that way. So that's Profit Sense. If we look at IBIS, which we also use for some benchmarking and some industry research and stuff like that, what we see on the net for the last year that this was available was 10.5. So probably that's basically half of what Profit Sense is showing. Okay, so we got a range. And then if we look at the AICPA CAS benchmark survey from 2021, so this is CAS and this is a CAS show, so theoretically it's fairly appropriate. CAS margin, what we've got, 2020 median, 34%.
So we're looking at like a third, right? Like a third of what you're bringing in ought to turn into profit. For an accounting
Maybe.
firm, maybe, right? I don't. Again, like we're not judging anybody's firm. We're not saying like these numbers should hold for every firm, but because I think depending on your firm structure, right, and obviously a lot of these studies are going to sort of lump together maybe solo operators like me versus, small regional firms with 20, 30, 40 employees, right? And, as soon as you start adding the payroll costs, those margins can vary dramatically, depending on who you just hired and what role you hired them for, and therefore how much you're having to pay them, and whether they're bringing in clients or not. And so those margins can vary dramatically, not just across the size of the firm, but even from year to year, right? So and I think we've seen. And we're going to see, as tax code gets more and more complex, and we're kind of still in this weird COVID-ish kind of economy where we still have a lot of factors affecting benefits that are and relief that are the result of COVID, as well as for small businesses, as well as just the nature of business has changed, right? With a lot more work from home and people starting side gigs, all this kind of stuff. So, it'd just be interesting to see how the accounting profession just evolves over the next 5-10 years. And what that's going to do to these margins, right? Because just like a lot of our clients are shifting to work from home or more remote settings, a lot of accounting firms are too. So that's obviously going to have an impact on bottom lines.
Yeah. There's plenty of work out there. I mean, we all know that. And so, theoretically, we're going to have pricing power. We've got pipeline issues within the CPA profession and bringing new accountants up and in. So, theoretically, I would think that those margins would increase. I'll tell you about our firm, where we target is actually 20%. So 33 would be great. My target's 20%. And the reason why is I want to pay my people a little bit more. I want to have a little bit more excess capacity, probably than most firms carry, because I want our turnaround times to be a little bit faster than what they are on average, I would say, across the industry. And we make very heavy investments in education, continuing education. We do it for everybody. And we make very heavy investments in what I would call R&D. building out automation and looking at, different processes and things like that, and software, which is kind of related to the gardening.
Non-billable time.
Non-billable stuff. Yeah,
Stuff you
I've
wouldn't see on
made,
the timesheets.
yeah, exactly. I've made very heavy investments for several years now, and I don't foresee that stopping. So 20% to me, that's good. And then that's going to put us in a really good position for the future. Theoretically, that is going to create value in the firm, theoretically. And, it's going to sustain those three things where, I said were the kind of the keys to why I would run a firm. So more time with family, more money than what I would make in a 9 to 5, more golf.
And this is raises an interesting question that I often start trying to push these conversations that I'm having with other firm owners in terms of thinking about profitability or efficiency. So so far we've been talking about it at the firm level, right? So when we talk about you should have 34% margins, or these benchmarks are saying 34% margins are average or whatever. We're looking at the firm's bottom line, but that might not necessarily mean that every single one of your clients, right, is responsible for 34% profit, right? Or every single tax return, or every single bookkeeping cleanup that your firm does is bringing in a 34% profitability. So does it make sense to think about, and I see accountants doing this a lot, does it make sense to think about per client profitability or per project profitability, right? Because, an accounting firm will take on, let's say, a 1040. Let's say you sold a 1040 to a new client, and you sold it for X number of dollars. And now you're sitting there, you're tracking the time, you're tracking the utilization, maybe, right? Or you're tracking how many hours were spent to actually do that return. And so now you have this rough notion of this is how much it cost us, right? In terms of, our internal metrics of the labor to go into this return. This is how much we charged for it. Were we profitable on this 1040? Is that even something that I as a firm owner should be thinking about or tracking? Because I don't, right? But does that make sense to think about profitability and efficiency on a client and or project level?
Why does it matter?
Yeah, I mean, and I think that's a fair question, and this is what I usually ask, right? Because I think you're right in that one. Why does it matter, right? What are you actually going to do with that assessment? Let's say you sold that 1040 for $1,000 and it ended up costing you $1,200 in labor, right? Based on however you're pricing your own internal staff. And so
Which is
does that mean
opinion,
you did,
by the way?
well, which are absolutely right. Like that's not how much you're actually paying these people, right? That $1,000 for the 1040 is how much you got paid. Right. So that's actually a sticky number. That's a hard number that will hit your P&L. Right.
Mm-hmm.
However you're measuring this utilization or efficiency or productivity, you're literally just making those numbers up. And the response I usually get to that is, well, prices are made up too. It's like, no, not if somebody's actually handing me that money, right? If somebody actually handed me that money, that's real, right? The price might have just been made up, but it was made up in such a way that somebody actually gave me money for it. And that's not made up, right? I can point to that money in the bank. I can show you that deposit, on the bank statement. But, so if we're comparing that to profitability or utilization or whatever, does that even make sense? And let's say you did that and, the numbers come out and yeah, it was $1,000 that you charged for the 1040 and actually cost you $1,200 in labor because I don't know, it's a new client and some unexpected things came up and there were some weird credits that happened, or maybe they showed up and they had 3 rentals they forgot to tell you about, right? So it ended up being a lot more complex, more difficult tax return than you expected. And so, what does that mean? Does that mean you don't take that client again next year? Does it mean that, what does that actually mean? How does that information, how does that analysis actually affect you and the way that you're running your firm?
Okay.
Right?
So are we talking about project-based work, or are we talking about subscription-based work, or are we talking about both? What are we talking about? It depends on how you run your firm, right?
This is another issue I have with it, right? Is because some of these accountants will say, oh, but I use value pricing or I use value billing. I'll say, okay, so if you're talking about how much you sold that 1040 for, then no, you're not, right? First of all, because under value pricing, you're pricing the engagement or the relationship. You're not pricing the actual work. But okay, let's even assume that you came up with a custom price. Let's call it a custom price for that 1040, based on what you learned during discovery and your initial meetings with that client, and that kind of stuff. So you came up with a custom price for that. Okay, right? Again, like, what does it matter, right? Like, and maybe you need to adjust that price up next year. When they come back for another 1040, that's fine. Here's another thing: is I have an issue with per project notion of efficiency or profitability, because let's say you sold that 1040 for $1,000 to that new client, and it ended up costing you 1,200 in terms of however you're measuring efficiency or profitability, and so you took a loss, right? By your own definition, you took a loss on that 1040. Let's say, well, this client is causing our business a loss. We don't want to work with this client anymore. But let's say because they were so impressed by the process that you put them through to prepare that 1040, now they want to bring a whole bunch more work to you, right? They want to bring their corporate books and their corporate returns to you. They want an ongoing advisory relationship with you, because they're, those 3 rentals that popped up out of nowhere, they want to expand that portfolio. That's just the first stage. And they're going to be looking for advising, over the next couple of years on building out their real estate portfolio. And so that's going to be a lot more, right, opportunity to work with them, and therefore charge, for the help that you're giving them. So maybe that $1,000 1040 turns into a $50,000 client relationship over the next 3 or 4 years.
Take that another level. So that $1,000 1040 brings in $50,000 more work, but what would it have for free? By the way, you didn't, no marketing, no advertising, no time, nothing. Just somebody who's impressed brought in more work. What would you have paid in advertising and marketing costs to bring in that extra $50,000 worth of work? And then how are you pricing that? How are you working that into your model?
And this ties back to what you said earlier on. So, when I talk to other accountants and firm owners about these notions of efficiency and profitability, they're looking purely internally, right? They're comparing, this is how much we got paid to do this work versus this is our assessment of how much it cost us to do this work. What never comes up in these conversations is any sort of external sense of efficiency. And so you brought up 2 that I think are great, and I always recommend them as well, is looking at referrals, right? So maybe that $1,000 1040, maybe they don't bring any new business directly, right? But maybe they refer you out to their friends who are business owners, who are real estate investors, who have more complex situations. And so their friends now bring in, right, a lot more business. And so that $1,000, one $1,000 1040 turns into 10 new clients, right, over the next couple of years, because you got those referrals. And then the other one is, of course, retention, right? And so now that you know the truth of this client's particular tax return, well, next year's tax return doesn't have to be $1,000 again, because you've learned a lot more about that client. And so next year's tax return, maybe you can price that up, right, the way you think it should be. And so, I think when we're really talking about profitability and efficiency versus what you called effectiveness, right, which I think is a lot better way of thinking about this, we need to be thinking about this not just in terms of, how are we crunching the numbers internally as to whether this made sense for our firm, but we need to be looking externally as well. We need to be looking at the overall relationship with that client. And is that relationship profitable? Is that relationship effective for our firm? And that's where the real truth is.
Well, how about this? How much time, energy, and effort are you putting into pricing whether or not that, or figuring out whether or not that relationship is quote unquote profitable? That $1,000 tax return that you spent theoretically $1,200 on, theoretically, because it's an opinion. So how much time, energy, and effort and stress did you spend on just figuring that out? So there's that. So this tax return that we think that we're losing $200 on, why don't we just start with, did I enjoy doing this work?
Yeah.
Do I like working with this person? And then the next question is, do the people who work in the firm, did they enjoy this work? And do they like working with this person? And then the next question is, my entire firm profitability, which is the insurance model, is it where I need it to be? Which is what we talked about a couple minutes ago. And if that's a yes, well then what are we talking about?
Yeah. That's the other thing is, when we talk about efficiency, we're looking at timesheets, and we're assigning a certain amount, a dollar amount to per hour, per tenth of an hour, right? Depending on how granular your firm owner is managing that. But what also never gets brought up, and that I always recommend is, hey, just go talk to your people, right? Just go talk to your employees and your staff, right? Like, and so I have one-on-one with my staff, right, every week, and something that I'm always asking them about. One, uh, part of that one-on-one is them telling me what they're getting hung up on, right, over the last little bit. Part of that comes up, right? Hey, I need help with this client's books because things aren't tying out, or we this is a bank statement that we can't automate collection of, so we need the client to get it to us, and they haven't gotten us the last 3 months. They're ignoring our request for that, right? Like, okay, fine, let me intervene, let me see. But in the meantime, right, is this a recurring issue with this client? Is this something that we're just always having to nag them about? Right? Are we getting help through Uncat? Are they being responsive at all to us? If so, then this is a one-off thing. We'll get it straightened out, and then we'll keep going. But if this is happening every single month, or if at every weekly one-on-one, right, this staff member is bringing up this same client over and over and over again, you know, this is not a problem for that individual staff person. This might be a problem for the whole firm. And that's not something that you're going to see in utilization. That's not something you're going to see in the timesheets, right? That's something that only just sitting down one-on-one with that staff person is going to uncover and help you understand about the way your firm is operating. Because, I think we're at a point now to where it's a lot less about, is this person keeping this seat warm for enough hours a week to justify employing them, versus does that person want to continue being employed in our firm, right? That's, I think, where, as firm owners, we've got to keep our mindset when it comes to accountants, because again, it's a seller's market, right now, in terms of being a qualified accountant. And if your people if they're tired of working with a particular client, or if they're tired of just having to deal with the admin side of being an employee of your firm, right? If they're sick and tired of every Friday afternoon having to get their timesheet in on time, that's just going to make it that much easier for them to walk right out the door and never come back again.
Mm-hmm. I actually wrote a blog post about that, not for accountants, but for marketing agencies. I don't know, maybe a month ago. I called it the 3 F's of employee retention. And one is financial. 2 is friction, which is directly speaking to your point. And then 3 is flexibility. So they have the flexibility they need. And, we all know about that and working virtually and yada, yada, yada. But that friction piece is huge. And friction, and you're right, you're not going to see that on a utilization report. You'll see it when they leave, though. Yep. You'll definitely, you'll see it and you'll feel it when they leave, for sure. And that's going to be expensive too. So how are you measuring that in that $1,000 tax return that nobody likes doing?
And it's the exact same with the client, on the client side too, right? Because if those 3 F's that apply to your employees, they apply to your clients as well. And if your client is just sick and tired, like, no client particularly wants to work with their accountant, because what do we represent? We represent taxes. You got to do all this. Bookkeeping. Was I profitable or not? We hear the same stories from all of our clients, right? Other accountants take too long to get back to us. All these kinds of things. And it's just nothing but friction, right? It's just this constant source of friction. We're the gatekeepers of the financial information that they need about their business to know if they're running good businesses. And, we're over here trying to get the books clean and get everything reconciled and all that. And in the meantime, they just want to know if they've got enough cash to survive another week, right?
Yep.
Or if they've got enough cash to be able to send their kid to college, in a couple of years, or this kind of stuff, right? And we have that information, or at least they see us as having that information. And it takes us 2 weeks to respond to an email, asking these questions, right? That's friction, and there's nothing holding those clients, from walking right out the door. And the same is true of our employees. And this is all stuff that you're never going to see in your timesheets. This is all stuff you're never going to see in this sort of cost accounting approach to running an accounting firm. And I think that this entire subject of efficiency and profitability within an accounting firm is accountants just being really good accountants, right? If you can do all of this, if you can break down all of this, all of these metrics within your firm, and you can create your own internal metrics and reporting systems and dashboards and all of this and feel really good about that, that's fantastic. Good for you. But nobody besides you cares, right? Nobody besides you is asking for that information. Nobody is, making investment decisions based on this information, making, spending decisions based on this information. You're the only one who cares about it. And at the end of the day, it's just you being a really good accountant. And, I hate to say it, but like there's a lot of things that you're being good as an accountant, but as a business owner, you're probably letting slip through the cracks because you're so worried about utilization and you're not worried about whether those employees are happy working there. You're so worried about the profitability of that last tax return, and you're not worried about whether the client even wants to come back to you with more work to do next year or next month. Right?
Mm-hmm. The functional Ponzi scheme that Michael Myhouse talked about, right?
Absolutely.
I think historically accountants have been maybe a little bit more plug and play, right? We just need a warm body to fill the seat than what they are now, and certainly what they're going to be in the future. So you just can't think that way. We don't have the pipeline for it, right? So we have to remove that friction. They have to like the work that they're doing. They have to have that flexibility, and we got to remove the friction for the client. Because what I say internally all the time is, for the client, going to the accountant is like going to the dentist.
Yes.
To some extent. And our job is to make it less like the dentist, more approachable, less friction, easier to work with, that sort of thing. But then also, we have to make it good for the employees as well.
You can be a dentist and create. You'll never get over.
Talk to me about that.
You'll never get over that sense of. Man, I just don't want to go to the dentist, right? But once you get that person in the door, right, you can create a welcoming environment, a supportive environment, a calming environment, right? And
the dentist,
you're still gonna have to numb that client. You're still gonna have to drill their teeth, right? You're still gonna have to do all that, right? And this is somebody who just went through some dental surgery about 6 months ago, right?
So do you have a really good dentist?
Hey. I have had really good dentists in the past, right? I've had really bad dentists.
I do too, but they still stress me out.
I have left dentists where I was fine, but my wife had a different technician and a different dentist in that office, and we left the office and she was sobbing because her technician and the dentist both were just so. The way she talked about it, they were just so rough. They were so uncaring. They were just almost inhuman about the way they were treating the patient in the chair. And, on the flip side of that, I have had dentists and orthodontists where it's been, a relatively intense procedure and dental surgery. And, no, it wasn't the most fun time I've ever had. I'm not saying that, but for what it was, and, for them explaining to me what the procedure was going to be and why it was necessary and what the long-term benefit was going to be. And even, when they brought out the estimate of here's how much it's going to cost, it was a no-brainer, right? Because they did such a good job of making me feel supported and that this is the right diagnosis and this is what needed to happen. And I think a lot of times, we take that for granted with our clients because we're not in this profession that, you can see some tangible result, right? That, you can extract that tooth and you can put the replacement in there. And then, the patient after 6 months or a year is just back to normal, right? And for us, it's not quite that same thing, right? We produce a tax return. Here you go. Here's how much you owe. And it's this moment of just like, why? Like, why is this result so different from last year, right? Last year I got a refund. This year you're telling me I owe, right? Like, you must have done something wrong, and we just kind of take it for granted that the client is just going to go along with whatever we present to them because we're an expert, right? Because, we put a lot of money into software that gets it right. We've gone through a lot of training and experience to know that the numbers are done right. But there's that bedside manner that, it can be lacking a lot. And I'm guilty of this, almost every day too, right? I've got emails in my inbox from clients that I need to get back to. I've got tax returns that I need to get prepped that clients are, asking me about, right? Like I'm not saying that I'm above any of this. We're all in the same boat here. But there are ways that we can make some of this just a little bit easier on everybody involved, right? And those solutions and those ways of humanizing the work we're doing, they're not going to be found in your timesheets, right? They're just not.
Okay, so taking this a different direction, we're not doing timesheets. We're not terribly concerned with project profitability per se, and I think we beat that up pretty good. Now let's just say that we've got a target net percentage for our firm, and then what? So what do we do with that? Are we like, what are the next steps? What's the process?
Yeah. No, that's a good question. And I think this is where, sometimes I have to step away from my own firm and think about it like I would be advising a client. Right. So I look at my P&L, I look at my balance sheet, and I try to put myself in a client's shoes and a client's mindset and think like, okay, if this were a client of mine, what would I be telling them? Right. Revenue has been steady for the last 6 months. That's not a bad thing, but it's also not a good thing. Right. Like, why are we not growing? Right. Or having a serious conversation of, you just got through busy season. How'd it go? Well, it could have been better. What would have made it better? Right. And actually going through the process, that I would if I were sitting down one-on-one with a client. So yeah, in terms of, you've set this goal, right? You've set this profitability goal. You want 20%, net margin or whatever. Okay. First of all, why? Those three reasons that you had for wanting to go out on your own, and you want a certain level of profitability so that you can do X, Y, and Z. Great, cool. Are you doing that? Is that how's that working out for you? Right? Do you feel like you've made it to those goals? If you do, great. What's next? Right? Like, now that you do that, are we on autopilot? Are you looking to just maintain that? Because that's not wrong, right? But if there's something more than that you're still holding out on, right? Maybe it's not just that you want to go golfing every Saturday, but you need, you want to go golfing at cooler places, right? Maybe one of your bucket list items is to go play 18 holes at St. Andrews, right? Or something like this. So
Nice
when
with the
can we
golfing
make that
references,
happen?
by the way. Well done. I'm proud of you.
I'm not a golfer. I'm not a golfer.
That's why I'm so proud right now.
Paid enough attention to know, right? But maybe that's one of your things. And so then I think you get to this point to where it's like, okay, I can maintain the lifestyle I want. And now you start thinking about, like, what are some of these bucket list items, right? And then you also start thinking about other people around you, right? So, obviously your thing is playing golf and spending more time with your family is your thing. What does your spouse want out of the situation? What can you be setting up for your kids when they're 15, 20 years from now graduating, out of college and stuff? What could you have set up for them, right? And all of this as a self-employed person is going to tie back to what decisions are you making in your business today to facilitate all that, in a couple different ways. One, are you building a profitable business, right? Are you running a profitable business? And so you can use those profits to fund, some of these things that you want to do, some of these goals. But then also, are you building a business that itself is going to be attractive and sellable at some point? Because hopefully you don't want to be running this firm, till you die, right? Hopefully you want to be able to turn around and have this as, and I think this is another thing, right? Is, you get so wrapped up in thinking about profitability and efficiency, and that's okay. But also, are you building a sellable asset? Right. This is something to keep in mind as well, because, again, I haven't done a lot of M&A work, but I can't imagine that, timesheets are going to be a big factor in that M&A discussion. Right.
I would hope not.
I think it's going to be other things, right? I think it's going to be bigger things. You brought up building automations. That's something that we're not going to say is, good billable time, building an automation for an internal process, right? But if it makes your firm better, if it makes it easier to come work for your firm, if it makes it to where, your firm is more attractive to somebody looking to purchase your accounting firm, and therefore you can get a higher multiple, out of it, then that was time and money well spent.
Yeah. And by the way, when I said 20% is what we look at, and that probably seems low to a lot of people who are going to listen, but the way that I think about it over the long term, we've got a lot of IP internally, and especially with automations. And these are things that they're thought about and built in a way that we could add those to other firms were we to get acquired, and they would save that firm time, money, energy, effort, all that sort of stuff. And so I don't necessarily worry about the multiple from that 20% number. I because I think that there's value elsewhere that would help us to make up for that. So that's one piece of it. But if the way that we think about it is I basically build a bottom up budget. I figure out this is what my number is. And then I build a budget to get me to that number, whatever that 20% is going to turn out to in dollar terms. And that's where I want to be. And that's going to, and then I think about, well, what do I want my job, hate that term. What do I want my daily work life to look like? And then who do I need around me in order to be able to facilitate that? Because that turns into, am I playing enough golf and am I spending enough time with my family? And okay, well, I need these people. I know that they're going to cost this much. And, okay, well, I need this much revenue. And all right, if I need this much revenue, this is where I am now. This is where I need to get to. I need some sort of a coherent strategy and resource allocation for marketing and sales. So we need to do that. And then that's the way that I think about it. And you're basically just building a budget based on what your life needs are and what your business needs are in order to sustain that. And if that's sufficient, then you're good. Now, if I was thinking about selling the business soon, I would be maybe looking at that a little bit differently. I'd be looking at my client mix a little bit more carefully and making sure that the clients are paying high enough fees. We're getting rid of the clients where we're not effective. We're getting rid of the clients who probably aren't going to go through a merger anyway. We're documenting processes, which is going to cost some money. We're training staff, which is probably going to cost some money. Like the things that build value inside of the business, I would be focused on that a little bit more closely. But I mean, that's not where we are at the moment, but that's the way that I would think about it. But I would start with that bottom up approach. Is this going to sustain the life that my family and I need? And then what does that look like? What resources and what effort do we need to put behind that?
And I think the more that you do that inside your own business, the more you get your mindset off of just these internal metrics that you just kind of made up as a way of benchmarking yourself against yourself, and more into thinking about, what does this actually matter to the people that I care about, right? Both your staff internally as well as your family and friends and golfing buddies and whoever else, right, that matters in your life that is external to your work, right? Are you doing things that are improving the value of your life and their lives, right? And again, this is not something you're going to see in the timesheets. This is not something you're even going to see in the financial statements, right? But if you can start moving yourself in that direction to where you're building the business for the sake of quality of life, not just for the sake of building your business, right? And not to downplay the importance of that, because again, if you want to be doing these things in your personal life, you've got to have a way to fund that, and that's going to come primarily from your business, right? So you've got to build your business, but you're building it for a purpose that is outside of the business itself. And then the flip side of that is when we get our mindsets in the right place to do that, we're going to be so much better advisors for our clients, because they're in the exact same position we are, right? They're slipping into these old habits of, I'm building the business for the sake of the business. I'm tracking things in the business for the sake of tracking them. I'm setting aside my personal goals and ambitions because I'm concerned about profitability. I'm concerned about, things within the business, rather than seeing the business as a means to an end, which is, quality of life that I'm aiming for. And we need to be able, as one of their most trusted advisors, if not the most trusted advisor that our clients have, right? We need to be able to step in with clear minds ourselves and be able to look at their situations and say, look, just because you can measure this thing in your business, if it's causing you more stress, if it's taking you more time to measure this and break it down and analyze it, then it's really worth. If your assessment of that metric is not really generating additional value for your business, maybe you should just set that aside and go talk to your staff, go talk to some of your clients, right? And figure out what's really happening on the ground. And if we can't even wrap our heads around doing that, it's going to be that much harder for us to be good advisors to our clients, helping them, figure those kinds of things out too.
Yeah. So I've been there, done that thing, right? So if you can ask these questions of yourself and figure it out and do it well, you can take those same questions, repackage them, and ask them to the client because they're it's the same boat. I mean, businesses are all different, like what they do and how they do it, and yada yada yada. But the basic fundamental questions they're all the same. Do you enjoy doing what you're doing? Are you being effective for whoever it is or whatever it is that you're serving? Is it profitable enough? What does it need to look like?
We did the episode on books, right? Our top, we each had our top 5 books. And this is the reason that you can have so many of these business books that are all, about 75% saying the same thing, right? Because and being read, by owners of such a wide array of businesses. So somebody can pick up Traction, who runs a factory, versus somebody who is a real estate broker, right? Like, you can have wildly different industries getting a lot of insight and value out of the exact same book, because, like you said, at the end of the day, we're all dealing with the same set of issues and trying to figure out the same kind of things for ourselves. And so, now the counter to that is that I think within your own business, there's real value to niching down, right? And saying, like, I understand, this particular industry, or I understand this particular demographic or psychographic type of client, right? But you're coming at that from a place of, I understand the issues that business owners face because I'm one of them too. And I know how I've dealt with this and how I'm dealing with this. And therefore, let me help you along as well. But the clearer you are on your own situation, right, and the better grasp you have of your own situation, you don't have to be perfect. You don't have to have it all figured out. But you've at least got to be willing to say, this is something that I'm just doing because it's a vanity exercise, right? Nobody really cares what my utilization rates except for me, except for me. Nobody really cares about the profitability of that 1040, that we just finished, right? So knowing that information is not moving the needle in my own firm. So what are my clients doing? What are they spinning their wheels on that is not really moving the needles in their businesses that I can help them mentally get away from, or get around from, and let's figure out some things that are actually going to start moving the needles for them.
Yep. All the way back to effectiveness and enjoyment.
Absolutely.
Okay. So we have covered a wide range today, for sure, around effectiveness and productivity and efficiency and timesheets and all of the good things. So wrapping it up, what are the key takeaways?
Yeah. So I think number one is, like you said, move away from concepts of efficiency and profitability mentally and start focusing on effectiveness. Drop the purely numerical approach to these concepts and start thinking about the human approach, right? Talk to your people, talk to your clients, talk to your staff, stop looking at timesheets, stop looking at profitability measures, and just talk to them and figure out if you want to be doing this work or not, if they want to be doing this work or not, if they want to be working with you or for you or not. Those are the questions you're really trying to answer.
Yep. Do all those things, it'll take care of itself.
Yeah. And it's hard. You're going to have some hard, awkward conversations, but those are going to move the needle for you a lot more than looking at another week's worth of utilization statistics.
100%. All right, Jeremy, it's been a great conversation. Appreciate it as always. And we will catch you all on another episode of the CPA Advisory Show.
Hey, it's Jeremy. Thanks for watching the CPA Advisory Show here on YouTube. If you enjoyed this episode, please subscribe, like, and leave us a comment. We'll probably read your comment on the air. Be sure to follow us on Twitter at CPA Advisory Show. And if you have an idea for a topic or guest you'd like to see, email us at host@cpaadvisoryshow.com. Thanks for watching, and we'll see you next time.